Joseph, you were saying to us earlier that really the sort of recession fears in markets are very overdone. So does that mean, if you translate that to Fed policy, that you think the Fed perhaps needs just one more rate cut, if that, and then it can be done?
Yeah, that's the kind of scenario that I'd expect. You never say never. The facts are always changing, as you know. So we've got to, again, continue to monitor the data closely. But I think that's the right sentiment. I mean, we have seen a lot of headlines and concern around the manufacturing data in particular, the ISM data of last week, 6-year lows. Lots of concern that the deterioration in capital spending and new orders is really going to have an effect, and maybe some evidence that some of that manufacturing softness, some of that manufacturing recession is beginning to spill over into the services sector.
Yeah.
But our feeling is still based on the evidence that we see across the whole economy, the evidence that we see in the labour market, that the US growth still looks okay. We do this thing called nowcasting, which is like a big data modelling of global growth. And that tells us that US growth is still running 2.5, maybe slightly higher. It's not great, right? It's not a great pace of growth. It's not a Goldilocks economy by any stretch of the imagination. But I think what you say is the right way to put it, that a lot of the cyclical pessimism that we see, a lot of the anxiety around recession is probably overdone and misplaced at this point.
Okay.
What do you expect as far as the bond purchase program? The Fed wants to kick it back into gear, says it's not quantitative easing, but it should. It seems like it could put a lot of downward pressure on yields.
Yeah, so I mean, I think there's a lot of confusion around some of the recent statements from the Fed. They've been talking about organic balance sheet expansion. Maybe we need some inorganic GM-modified balance sheet expansion. I don't know, but the decisions that have been taken and the adjustments that have been made in terms of dealing with the challenges in the repo market are very much technical solutions to a technical problem. That's what, in old money, what we would call open market operations.
Yep.
The bigger question really is whether or not there is a policy signal, a change of policy that is then moving towards something easing more in Fed funds, or a new expansion in quantity easing. And you know, we've got to watch the data closely to see if that's going to happen or be required. But at the moment, as I say, I just don't see that the situation cyclically is deteriorating as fast enough to require that.